I mean, you said pretty much most of the things regarding myself, but I like to add a little bit of color, because I have been dealing with emerging markets since the last 25 years, and only 17 with Rothschild, primarily focused on Central and Eastern Europe. I was before responsible of Central Eastern Europe, including, you know, your beautiful country. I was supervising and several other geographies in Eastern Europe for Rothschild. And the last 8 years, I'm in charge of the CIS region. So whatever goes from, you know, Ukraine included, Moldova, Russia, Kazakhstan, Uzbekistan, the Stans, so basically all the Caspian as well, you know, Black Sea region. So now I'm in charge of this region, which I like particularly. Now, I mean, you probably, I don't want to spend too much time on Rothschild. You know, it's a very long history. The family has a very long history and pretty rich history in Europe, especially. But if we come to today's activities, is an important financial group which is active in different spheres: private banking and wealth management, merchant banking, and what we call global advisory, which normally is investment banking, which is what I'm doing. This is my area of responsibility in CIS. I'm responsible of global advisory in the CIS. And what is global advisory is for us is independent advisory. We are one of the few left real independent banks among the various investment banks. And we do essentially many things, but essentially 3 things: mergers and acquisition, debt advisory, could be debt raising or debt structuring or debt restructuring, which is quite popular in these days, or equity. Equity typically is advising our client on IPO. Now, talking about M&A, for the people which are not familiar, I mean, everyone knows, heard what is M&A, but in practice, it consists for us in advising our clients either to buy or to sell or to merge their businesses, or buying a target business, you know. And normally at Rothschild, we deal with transactions above $150 to $200 million in any sectors: banks, IT companies, oil and gas, pharmaceutical, whatever you want. Any sector is covered. That's what I'm doing normally. Now, we are talking about what's happening in M&A during these very strange days globally, and then we'll have a focus on the CIS, which is the region of interest of the people attending this conference, as I understand. Now, I will. It's gonna be short and mostly based on some charts and like 15 minutes, something like that, and then I'm happy to answer any question you might have. So, if you take a big picture and you look at the economy, global economy of the last 40 years, the COVID contraction is by far the most violent one, which the people which has lived for the last 40 years has experimented. You know, here you have all the main catalyst of various crises which happened in the last few years, from, you know, the Latin American crisis, starting with Argentina already in 82, the dot-com, which coincided with 9/11, and of course the global financial crisis, GFC, which saw a contraction of almost 4% of the advanced economy. The blue line is advanced economy, the yellow one is the overall world, including emerging markets. And you can see that COVID, in terms of contraction, is by far the most violent, with a contraction of globally so far expected to be 6% at global level. So that's a pretty big perspective, and we are experimenting something which is quite unique. What is also interesting with respect to this crisis is that all the other crises were kind of a result of different external events, being financial, most of them, political, stock market, like in the dot-com. This is the first health crisis, the first pandemic, and is the first economic crisis which is provoked by decision of the governments, because it's the government which self-imposed the lockdowns, creating the consequent financial crisis. I'm not saying that they shouldn't have done, but I'm just saying is is a result of the crisis being provoked by ourselves, by our government, which decided to stop the economic activities to maintain the pandemic, to constrain the pandemic. Now, how the markets, the financial markets react, of course, we look at the US markets. The reaction was quite positive and quite fast. Here you see an interesting chart which gives the time that the US stock market took in order to go back on track from the peak of the crisis. And the yellow line you see is the average in the last 70 years, how many months after the peak of the crisis the markets went back to where they were before or grew. And the blue one is COVID. And you see that COVID, the return to market, and even surpassing market, has been much faster than the average of the crisis of the last 70 years, which is also due to the nature of the crisis I was alluding before, right? Now, the same thing is for the debt market. Here you have US investment grade and high yield bonds. Of course, they've been hit significantly by the COVID. There've been a big correction, like for the global financial crisis, but then they continued the pricing at this pricing trajectory as before and even surpassing it. Therefore, if I may go back, from a pure financial, equity financial or debt financial perspective, the markets have waived the crisis quite well so far. I mean, the big question mark remains: what is the peak of the crisis? Because here the analysis assumed that the peak of the crisis was in March, April, but now we are in front of a second wave. So we have to see where this point, which is the peak of the crisis, will have to be positioned in the end of the story. But anyway, the reaction of financial market have been extremely and surprisingly positive. Not so surprisingly, but we'll explain why. But definitely positive. Well, on the contrary, the M&A market have been hit severely. You know, M&A market are in general very volatile. I mean, buying and selling companies they're very sensitive to external turbulences. For the simple reason that when you buy a company, you need to have an idea how much the company is going to be worth in the next years, how much is going to perform in terms of revenues, how much the debt is sustainable, and so on and so forth. And in a world of uncertainty, it's very difficult to make transactions because the perception of the buyer and the perception of the seller might be very different. You know, one could be more optimistic and one more pessimistic. But I challenge everyone to make a proper forecast on airline business or hotel business in 2021. I mean, nobody really knows. Even the scientist really knows how this is going to develop. So this clearly put a halt in not a halt, but a significant reduction of M&A activity, which indeed, on a global scale, in the first half of this year decreased by 50%. And especially at the peak of a crisis so far, April, May 2020, that was really minus 50% between announced and also closed deals. So a pretty big hit. But now let's look at what are the features which are going to shape the future of the economic and financial world, and which are the consequence of the COVID crisis. First of all, we'll have to put in the next years, we'll have to put attention to the state debt. Now, I don't know if this, if on my screen I see only part of the slide. I don't know, Adam, you see only part of the slide or you see it full?
I can see a full slide.
Okay, good, because I see your face here. Anyway, I remember more or less the slide. So, the level of public debt in which we have now worldwide has never been so high. Now you see the last 120 years, and you see in yellow the advanced economies, and in is red or black, whatever, emerging markets. And you see the level in World War I, World War II, and global financial crisis, and today. And the level of debt we have reached today is absolutely a record. We can't say the same for emerging market because by construction they have a lower level of debt. But anyway, is much higher than it was 10 years ago. And that's a consequence of government intervention and the various stimulus. And clearly the fact that there will be a lot of government debt put a number of questions from an M&A perspective, of course, but for, in general, overall economy. All this debt sooner or later will have to be paid. Even if we go on with a low interest rate for a while, that cannot be forever. And that means that all this debt will be shifted to younger generation, and maybe taxes inevitably will have to come up at a certain point if the debt has to be repaid. Another interesting factor which is affecting, a macro factor is the level of balance sheet of the official sector. Here you see the balance sheet of the Federal Reserve, but you could draw a parallel with the European Central Bank. It would be more or less the same in terms of pattern. So in the last 10 years, the balance sheet of the Fed went from $1 trillion to $8 trillion. And with the global financial crisis, it went up 1 trillion, and then slowly growing with a program of quantitative easing. And then this year, basically from 4.5, the Fed balance sheet went to close to 8 trillion, $7 trillion. It's really a staggering and unprecedented amount of relevance of the balance sheet of the Fed, and we would say not so much, but similar pattern for European Central Bank. So what other factors are happening? It was already the case, but what is going to be exacerbated and accelerated with the COVID is the deglobalization, disruption of a global order, and political intervention. I think these three factors are going to slowly take shape, irrespective of how election in the United States are going. Of course, one candidate is more global than the other, but I think this type of forces are going to happen irrespective of the single individuals or the single party who is going to win the election. So the economic boom that we have seen in the last 20 years have been facilitated significantly by globalization, when basically speaking, Western companies relocated production in Southeast Asia primarily, but not only, and at lower cost, and maintain intellectual property when they could, and basically creating a lot of value for themselves, for the companies, and also for the countries which have been the target for relocation of production, not necessarily for the workers of and the middle class in advanced economy. That's the reason of populism all over the world. And this is going to continue because if you would consider that until few years ago there was one dominant global economy and one for all, today clearly you have China, which is a big challenger of the United States, more and more at global level, and you have also new forces, new countries which wants to achieve a more important role in their region. Think about what's going on today in the Caucasus with Turkey and the ambition of Turkey in the region nearby. So, and this is happening in different parts of the world at different pace. So with respect to the stability, I would say, of that we had like more 20 years ago, in the last 20 years, so 20, 30 years, I see that there is a bit of a reallocation and a bit of redefinition of a global order. And as a consequence of all these, since national security, since balance sheet, political intervention, government intervention are becoming more and more important, you will see more involvement of government and state and policy into the economy. With respect to what you have seen in a more liberal world, which we have been seeing in the last few years. So all this to say that this is going to impact in a way M&A. Globalization has been a big trend for M&A, and we will see definitely less cross-border deals than before. Doesn't mean there won't be any M&A, because there is a lot of consolidation, which especially in crisis time makes a lot of sense, but it's going to be a different type, and probably less active than we have been experimented in the last few years. Now, if we move quickly, mindful of time, to our region, the CIS, I would say the impact of COVID has been relevant on, I'm talking, of the economy, of course, has been extremely relevant, but if we talk about M&A, has been quite relevant, but not dramatic. The reason being that, unfortunately, the region has been already battered by local geopolitical tension, which started, especially when you talk about Ukraine and Russia, they started with the Crimean crisis. So you had an M&A market in the region which were around $80–90 billion a year of transaction until 2014–13 as an average, and which is translating now in 10 billion, 8 billion, and so basically 1/10. So COVID, of course, has an impact for the same reason I was alluding before on a global level. But when you go to regional level, the market was already quite downbeat. Now, if we take markets one by one, Russia also, the level of M&A in Russia has significantly been reduced. I was actually quite optimistic at the end of last year. I remember I was making a very wrong and but positive forecast about Russian activity, M&A activity in Russia, because I was very much upbeat by the appointment of Mishustin as new prime minister, and the speech of Putin, which was very much focused on economic development for 2020 and 21. Fortunately, COVID has put all this plan aside, at least for a couple of years, and the economic stimulus of the government has been more directed towards the COVID situation, and rather than on pushing up the economy as was the original plan. Moreover, Russia is suffering a more strategic issue, which is the hydrocarbonization of the world, and of the fact that investors tend to move away now from oil and gas due to all these ESG policies, and effectively the number of deals in oil and gas, which have been a driver of Russian M&A, are significantly less. Not only now, but it's a trend which is happening in the last several years. Now, big outlier of this is IT. IT remains a sector which sees still significant M&A activity, which keep us busy, fortunately. And that's one of the sectors in Russia where we are pointing a lot, and deals of medium and large size are happening, and where there is less politics involved and less strategic issue in a way. To be said also that political tension and all reputation, image issues which are arising from news of the last months, including the Navalny story, clearly are not helping attracting foreign investments in Russia. As a matter of fact, I don't want to give any political comment. Of course, I'm just saying that it's not helpful for attracting investments in Russia for sure. With respect to Ukraine, well, the same situation like in Russia. After the crisis with 2013-14, the M&A activity, which was not in any case significant, is much lower than it used to be before. There have been some important deals in the last few years, which give a bit of hope. There was a deal with MTS. There was the MRIA disposal, which we advised upon. And there is an uptick in the activity in IT in Ukraine as well. Number of good companies in Ukraine are actually attracting foreign investments. We are quite active in this matter as well. Agriculture remain a significant asset class of interest of international investor, even though is a bit difficult to transact because of his own specificities. But I would say that slowly Ukraine is starting reattracting foreign investment, especially in IT. Once again, the big minus of Ukraine, the big deterrent, is that for foreign investor, the rule of law remains a big question mark still in Ukraine, and not having a reliable rule of law sets a very big hypothec, a very big question mark to many investors as to whether they should risk to put their money in Ukraine if they cannot rely on tribunals and on the law itself. That's something that we keep saying to the local authorities, and it still remains an unresolved issue. Kazakhstan is suffering not very much a political tension between Russia and Ukraine, but mostly the fact that oil and gas is not so much the driver of M&A activity, whilst it has represented a great majority of investments from foreigners, and in any case of M&A activity in Kazakhstan, for the reason I mentioned before. So it's more than half of the volumes of M&A activity in Russia, in Kazakhstan, was oil and gas and energy, and the rest was telecom consolidation, which already happened, and metals and mining. So with oil and gas being more volatile and less attractive than it was in the last decade or 2 decades, the activity of M&A in Kazakhstan inevitably reduced. Now, to conclude on a positive tone, I think that the depression of the activity of M&A in CIS is largely due to geopolitical tension. There are some structural reasons. Again, the function of oil and gas in the general investment pattern, but geopolitical tension is something that should be resolved sooner or later, and I'm pretty sure that once such tensions are going to be smoothed down, the M&A activity in the region will go back to more attractive and more significant levels, especially leveraging on new activities and economies, as well as IT and consumer goods and so on and so forth. I think I can probably pause now, if that's fine, and I would be happy to answer to any question, Adam, or anyone from the public, and probably I can stop sharing the presentation. Well, that's another slide, but I think we can.
Thank you, Giovanni.
Skip it.
That was a very interesting point of view. I understand you focus mostly on the macro perspective, but also have a wonderful insight working on the ground with companies that are engaged in these M&A processes. So that is very interesting indeed. And I note that the participants have expressed, they have confirmed this interest in your presentation, and this is confirmed by questions that are coming in. So if I may, Giovanni, I will ask you to answer at least several of these. The first one being, what kind of assets your company is interested in, I understand, for portfolio in Kazakhstan. So what kind of, which industries in Kazakhstan are you looking at? And can you share with us any deals that are underway currently in Kazakhstan?
Okay. As a matter of policy, we don't talk about ongoing deals. Confidentiality for us is one of the key things, and in any transaction of a size, you need to be very confidential. I would say, you probably all of you have seen a very interesting transaction which happened a couple of weeks ago, which was the IPO of S.p.A Bank, which is an online bank which was pricing at the level which, frankly speaking, I wasn't expecting. And I need to congratulate with the investor, the founder, and all the people which have worked on this transaction, because it's really amazing. So and that is it's effectively it's a fintech platform. Calling it a bank is a bit restrictive, and I think Kazakhstan should point on IT sectors and artificial intelligence, and I know the local authorities from the very top, the first president and the people around him are very much keen on these, including cryptocurrency mining activity, which is very promising in Kazakhstan because of a cheap level of energy, but data centers, and for the same reason, all this is extremely interesting. Kazakhstan is moreover an important piece of the Silk Road, of the One Belt, One Road strategy, with even if China these days is not enjoying the biggest popularity that it used to be, to have this project, this huge infrastructure project will continue. And the Kazakhstan is very much like Uzbekistan in the middle of this. And I think whatever is infrastructure, being it transportation of goods, but also of gas, infrastructure assets remain of interest, because also in a world of low interest rates, infrastructure becomes attractive. Oil and gas, I think it's a more a contrarian approach now, because the prices are quite depressed. I believe prices of gas and oil would probably go up again. So I think that even if it's not very trendy, I think oil and gas remains prospectively a sector of interest. But IT and the combination of IT, media, and artificial intelligence and financial sector, I think is probably of a sector more prospective in the country.
Okay, thank you, Giovanni. Yet another question for you. Do you expect increasing number of NPLs, so non-performing loans, I understand, taking place? And if yes, in which countries?
Well, I think all over the world. I mean, clearly NPLs is going to be NPLs are going to increase in a very significant way, both retails and corporate. That's the next issue that governments will have to take care, and they're already somewhat taking care. I mean, the good thing is that with the first global financial crisis, the banking sector, especially in Europe, has become more conservative, with a higher level of capitalization and closer monitoring, and particularly thanks to the experience of a financial crisis, systems of addressing these issues and mechanism at European Union level and single country level have been put in place, and this mechanism can be easily restarted, this program, and re-put in place whenever there is a need. But once again, the situation of the banks are much more solid than they used to be 12 years ago with the global financial crisis. So NPLs, yes, all over the world, but hopefully the systems to address these are in place and will work again.
Okay, thank you. And one more. What is the percentage of initial investment that goes into commercial property?
I think the question is very weird. I mean, the initial investment which goes in commercial property, which initial investment in which country? And which...
My understanding is, I agree, it's a very generic question. My understanding is how much of that money that is going around is generally getting invested in commercial property.
Well, I cannot respond with a number because it varies very much from countries to country, and still, it depends what you intend by commercial properties. If it's the so-called targove center, the commercial, the shopping malls, or it includes office building, it's the office building dynamics is very much changing. It's very much changing from country to country. In Poland as well, there have been peaks of office building in Warsaw, and then for years nothing has been built. So it's a very volatile business. I would say I would say that if you talk about the shopping malls, if you consider this commercial center, there's been a big pause now. The construction of shopping malls has basically stopped. Clearly now because of COVID, but already before COVID, the attractiveness of shopping malls is being put in question because of the emergence of e-commerce and because of a number of reasons. I believe the good location commercial center will remain attractive assets, especially with low interest rate and recurrent revenues. They will remain attractive assets. But I think if the question is how much money is being put now, I would say very, very little. I would expect less than 5% of the total investments going into these economies.
And thank you. And what would you say about interesting IPOs of Russian companies? Do you expect any increase in those?
I do expect an increase. Because as I was showing in the charts before, financial markets are up, and I don't believe. Nobody knows, but if they continue to remain so high, because there is a lot of liquidity in the system, when investors are looking for new assets, valuation in the Western world are very high. So if someone come up with a good innovative business which can demonstrate generating immediate or prospective returns for investors, I think there is appetite also for Russian equities, especially for companies which are active in the IT and in sectors which are not politically tainted, or sector which are country specific. And there are many in Russia. Russia has many strategic competitive advantage due to the natural resources. So I'm not only expecting, I'm aware of several companies preparing IPO for first quarter or second or first half of next year. And I think they will be successful.
Okay, wonderful. Giovanni, we have 2 minutes to go before letting Maria start her presentation. And unless there isn't any more questions from the audience, my own final question would be, which economies would you predict to come out victorious following COVID-19 crisis?
Globally?
Let's focus on Europe, let's say.
China. No, we can see as usual that Germany is actually doing pretty well. UK remain a question mark due to the double combination of the Brexit and COVID. Clearly, waiving this crisis on its own, it's an additional challenge. Southern Europe should benefit from the funding intervention from the European Union. Poland is a country which has always behaved very, very nicely in the last, I will not say 10 years, but 30 years. So I expect Poland to develop quite positively. Like the Balkans, they might suffer a little bit because being a little bit in the middle between European Union and outside, they're a bit at the margins. And the UK remains a big question mark because of the political disruption. The political event of a Brexit, which is clearly very significant, but China, it's emerging as the only economy this year which is growing at very solid digit, which is also ironic, considering that the virus in a way arrived from that part of the world for whatever reason. But I think that the prospect of China going forward will remain solid, thanks to the very strong push that the country is putting on artificial intelligence and technology, which is something that in US people look at very, very closely and with a lot of attention, and is going to be the driver of the development of the economies, of the big economies for the next 15, 20 years.
Okay, thank you for this interesting insight. And as I provoke the audience, the questions are now coming to flood in. So if you can quickly answer.
I can stay a few minutes, yes.
Yeah, thank you. That's very kind. And one of them concerns your view on investing in Georgia concerning water reserves projects. There's a comment.
What do you mean the water reserves?
There's a comment from one of the participants saying that, as everybody should know, water assets are becoming increasingly crucial for many countries, and there are 17 highly distressed countries in the world. It is becoming more important than oil. That's a big statement, isn't it? It says Georgia has significant reserves and we mandate on the significant project. What are your views?
Look, I agree that water is strategic now. Comparing with oil, I mean, it's all difficult to do these things, but water is strategic. Is for instance, for China, is probably the biggest strategic issue is water going forward. Georgia is a country which is very much investable. They made huge progress and in the last 20 years. And it's small. That's a little bit the problem of Georgia. It's small, and investors like big markets, but still, there are different type of investors. And if you talk about infrastructure type of investments like water treatment and a hydropower plant, it's obviously a very good place where to put money, subject to geopolitical constraint, and where Georgia is. We know the recent history of Georgia and the tension with Russia, which hopefully are behind us. But besides the geopolitical risk, the country itself is very much investable, and hydropower plant, renewables, and water treatments are good assets where to invest, which should be able to attract foreign investments.
Okay, and apparently from the same person, Ayeti, there is a question concerning water for export. Can you?
What do you mean water for export? Drinking water?
I really don't know, Giovanni. This is my understanding. What is yours?
Well, no, I like Borjomi. That's the question. I actually mi nравится очень Borjomi. Я пью Borjomi постоянно. No, I don't know. I mean, it's a very. I mean, export of water. It's very generic question, but I think the trend is that iconic brands, like for instance, if you talk about Georgia and Borjomi, it's I know the company even too well, I wonder why. Not because I'm as a consumer, but as a corporate finance man, I know the company very, very well, and it's a great company, by the way, and the brand is fantastic also for export in all CIS. For more basic, not so iconic brands, export of water becomes in these days a little bit outdated because it costs some. I mean, when I see branded Italian water, just to take my country, to export it to United States, and I think about the cost of transporting these in terms of environmental impact, I think that, okay, for except for very luxury segment, people should drink local waters and avoid the transporting all over the world waters which have more or less the same biological chemical components. Anyway, so
okay.
but that's a bit of a difficult question to answer.
Giovanni, we need to be closing very soon, but one last question for you. What
Please.
is your view on the Indian market? Again, you'll appreciate a very generic question, so feel free to focus on any specific aspect of the Indian market if you prefer, or try to stay on the macroeconomic level if you wish. The question is very general.
I think it's one of the market, of course, to look at. I mean, the dimension is in terms of population is huge. It's comparable to China in terms of number of inhabitants. It's clearly a market to look at, and again, I would focus pretty much on new technology being developed there. And there are 6-7 big industrial group which are investing very heavily there, but it remains clearly an extremely interesting market. The problem of India is that the plus and the minus of India is that it is clearly the biggest democracy in the world. And changes and the implementation of things are happening at a lower pace than in China, for instance, because in China is a very vertical. They decide to push artificial intelligence and they just do it. And the impact is pretty imminent. In India, it takes all time because it's a big democracy with a lot of people have a lot of say. To changes, governmental directly changing takes more time. But at the same time, this is also a plus because on the very long term, it gives also a certain level of stability because it's already a democracy, So China in 50 years, we don't know where it's going to evolve, Probably nowhere. It will remain as it is now, but we don't know. India is already a democracy with a bad and with a plus and minus that the democracy has.
I agree, Giovanni. There is not much one can add following these very insightful comments. So let me thank you again for delivering your interesting presentation and for being so kind as to answer these sometimes all too tricky questions from our audience. Thank you, Giovanni. Well done, and have a good work. I
have to leave now. If someone wants to reach me, I didn't put my contact details, but you can reach me on Facebook with my name and surname. That's probably the easiest.
Well,
all right.
That's the busy people's reality. So we completely understand. Now,
thank you for the invitation and thank you for the moderation, Adam. Dziękujemy bardzo.